Good evening, everyone. Welcome to this evening's session on Women in Venture Capital Part 2 as part of Highwater Women's Investing with Impact series. I'm Melissa Desmarais. I'm the Executive Director here at Highwater Women. Highwater Women is a nonprofit organization located here in New York City, and we're about social change powered by professional women. Our mission specifically is the economic empowerment of women and youth, and we have 3 core programs through which we do that. We teach financial literacy. We've deployed over 3,200 volunteers to teach over 10,000 people financial literacy. We have an annual backpack and holiday gift drive. Since that program started, we've delivered over 150,000 backpacks into the hands of kids so they can start school ready to learn. And here today, you're engaging with us on our impact investing. A little bit more about that. Highwater Women started our Investing with Impact series in 2013 when we held the very first impact investing conference that was held here in New York City. Since then, we've delivered 122 workshops and panels, presented over 308 speakers, and engaged over 2,000 leaders, 79% of whom are women. And that's part of our work here today. Want to share with you a couple of upcoming events that we have in this program area. On November 10th, we're doing, as a part of our initiative called Decabillion Plus, Catalyzing Capital for Women in Venture Capital, we are holding a family office roundtable to talk with family office investors about whether or not they allocate in venture capital, and how we can get them to increase the allocation or start to allocate in that area. We'll share case studies and strategies. Coming up in January, we're going to have some conversations in and around climate change with the Project Drawdown group. If you are interested in becoming a member of Highwater Women, you can get advance notice on all of our programs and discounted tickets to all of our events. So if you're interested in that, please check out hwwimpact.org/membership. Today, we're here to talk with another amazing group of women who are in venture capital. I'm going to turn it over to Valerie Yen, who's on our Young Women's Council, to get us started on that.
Hey, thanks, Alyssa. Really excited to be here today. These are the women that are focused on changing the face of funders and capital allocation to underrepresented and diverse founders. So obviously, a supercharged group here. Hopefully, some of the conversation topics will include how to diversify the landscape of VC, what it means to mitigate the gender gap within the landscape, and potentially some interesting deals that they've been involved with. So just some housekeeping rules. For the agenda today, we're going to spend about 40 to 45 minutes having just a conversation with our panelists here. Then we'll open it up to the floor for any Q&A. And we will wrap up and provide, some takeaways for you all, and as well as next steps. For the housekeeping rules, in terms of interacting with us, please feel free to use the QA function to pose questions for the panelists during the discussion. You can also use the chat function to communicate with each other. We will be using this to post relevant articles and links and references that will come up during the conversation. For any post-programming questions or requests, please feel free to email Alyssa Desmarais, ademarais@highwaterwomen.org. You can see the email on the slide as well. And without further ado, I will turn it over to Kelly Graziati, who's the founder and GP of F7 Ventures. So Kelly, over to you.
Fantastic. Thank you, Valerie. And thank you, Alyssa, Valerie, and Highwater Women for having us. I am thrilled to have the privilege to moderate today's discussion and have Rachel and Erica with us. I am going to wax poetically about each of them for a moment, and then we'll dive into a few questions. But first, Rachel Ten Brink, she is the general partner and co-founder of Red Bite Capital. Rachel is a founder, board member, investor, and a top Latinx in tech leader. She was born and raised in Costa Rica and is one of the few Latina investors deeply understands the importance of diversifying networks. Prior to starting Red Bite Capital, Rachel was previously co-founder and CMO of Scentbird, a YC-backed fragrance subscription service that raised $29 million in venture funding. She is one of just 90 Latinas to have ever raised over $1 million in VC funding. Rachel has deep expertise in consumer and growth marketing and brings this to the founders she works with. Red Bite Capital is New York-based, focused on early stage, US-based fintech, e-commerce infrastructure, and consumer tech companies. Thanks for being here, Rachel, and we'll dive into a little bit more of that.
I was going to say, thank you very much. That's quite an introduction. I appreciate it.
Of course, absolutely. And Erica Kramer, she is the managing partner of How Women Invest. Erica has deep financial expertise as an investment banker for over 25 years. She specialized in mergers, acquisitions, recapitalizations, and capital raising. She's also an experienced corporate board director, family office, and VC investor and strategic consultant. Erica came together with How Women Lead, an organization of 50,000 women focused on disrupting inequitable systems. They've been focused on women in leadership in the boardroom and now have extended to venture to close the wealth gap. Erica and How Women Invest launched their first fund in 2020 of 10 million with 249 accredited investors. Half of their investors are women of color. So Rachel and Erica, thank you. It's incredible to have both of you and this esteemed group of women together. So as mentioned, you are founders, investors, investment bankers, CMOs, COOs. You are changing the face of startup founders and funders. Now, each of you could have had different and incredibly successful paths and careers. I'd love to kick off with each of you sharing just 1 to 2 minutes about what motivated you to start a venture fund.
Okay, I'll start, or if you want me to start, sure. Okay, so for me, I had done a lot of advising of other asset management firms, of wealth advisory firms. I had, it's sort of my own story. I'm first generation American. I'm also Latina by background, and first one in my family to complete a 4-year college degree, and had my own liquidity event, started investing in early stage companies. I was a co-founder in one of the few women-owned investment banking boutiques. And so taking that experience and then investing it with other women, I'm so inspired to want to support and invest in other women, and particularly women of color. So for me, it's really about bringing it forward and making money at the same time.
I love that.
Yeah, so I think a lot of the sentiment that Erica brings up resonates with me. For me, it started really organically. As I said, I spent all these years building billion-dollar brands at Estee Lauder and L'Oreal and Elizabeth Arden, and then had been a successful founder at Scentbird. And, it really started from just working with early stage founders. I love that inflection point where you start to see product market fit, you start to see companies take off. And, it really started from doing a lot of advising and just founders referring founders. And from that, realized that I had just incredible deal flow. And, I always like to joke that, I like to help every founder, but frankly, I think the white guys have a lot of friends. So I like to help everybody else out. That's the way I see it. So, for me, it really started from that idea of, working with the founders, being able to be very, operationally valuable, because I had that experience of, building the billion-dollar brands and accelerating. But I also was there with Scentbird when it was just like 4 of us in a room coming up with an idea, and how do you scale that to 100 million? So, it was a process that started with angel investing. But then, to Erica's point, you start to realize that you can do good and do well at the same time. And so it gets, really exciting.
I love that. I mean, both of your answers really resonate, and I'm laughing because I realized I didn't really introduce F7, which is my fund, but F7 was started by 7 women. And we all have 15 to 20-year operating careers. We all met and worked together at Facebook, but your motivations resonate, because I think one thing we talk about, there were many rooms and many tables when we were often the only female. And when we started investing, we were essentially blown away, somewhat surprised by the stats that we saw. Of course, both with the percentage of dollars going to underrepresented founders, but also the number of women writing checks. And so that really compelled us to come together and start to accelerate change in the landscape and in the ecosystem. And also really motivated to help, I think, as both of you talked about, and Rachel, you talked about with your experience. We've done a lot of company building, and that's something that is motivation one, to roll up our sleeves and dig in and help. So, both of those really resonated, and a lot of shared motivations there. On that note, I'd love to dig into each of your funds and theses a bit more. And Rachel, maybe we'll start with you, but can you share more about your focus for Red Bite Capital, and maybe even one example of an investment or advisory work, which I love that you pointed that out as well, an investment or advisory work you've done that really illustrates your focus as a fund?
Sure. So we're a seed stage fund. We're based in New York, but invest across the US. And we focus in the future of how and what you buy. So what that means is fintech, with a particular focus to consumer facing fintech, e-commerce infrastructure and marketplaces, and then the future of consumer tech. I think one of the companies that I've really enjoyed for a lot of reasons working with is a company called Tomo Credit, which is a credit card for recent immigrants and students. And I think a big part of it is because I was an immigrant and I went through that challenge of, my parents were helping me out, but I couldn't get a credit card. And, talking to friends who've come here for work, who have very good jobs, but don't have credit history and couldn't get a credit card. And so I thought, the way she was thinking about, this opportunity was really interesting. She's been extremely successful. She just raised an A round led by Capor Capital. But I think what I really love is just being able to be helpful. And, it's everything from, sitting down and brainstorming. I've had people sort of be like, well, but you're only consumer. What do you know about fintech? And I was like, well, first of all, we processed 500,000 transactions a month on Setberg. And number two, even credit cards need to acquire customers. And that's what I know how to do, right? So sitting down with Christy, who's the CEO, and brainstorming, how do you use TikTok? How do you, where are your customers? How do you connect with them? What is the message that resonates? How do you think through that process? That's been really exciting. And I will say the other piece of it right now is just the war for talent. And, having been in the industry for a long time, having a lot of operational expertise, but also a lot of friends that are marketers. I do feel like sometimes if you follow my LinkedIn, it's like, great job. But, right now there's a real war for talent. And I think as VCs, the fact that we have such broad networks can really help our founders. And so I've done a lot of matchmaking.
I love that. And Rachel, as you were talking about Tomo Credit and their focus on immigrants and sharing your own story, just this concept of lived experience. And it's interesting because I feel like we talk a lot about that when we talk about founders of companies, but as I'm listening to you, it's a reminder of just that lived experience and how important that is in the GP seat as well, and investing in those companies that are building solutions that we need in the world. So I really loved, that story around Tomo Credit. Erica, how about you? Would love to hear a little bit more about your fund and focus area, and maybe an investment that you feel like illustrates that.
Thank you. Well, so our experience is a little bit different, mainly because we're birthed out of this nonprofit organization called How Women Lead, which you highlighted in my introduction. How Women Lead, the community of women, these are very accomplished women. They're already in the C-suites of Fortune 1000 companies, and they sit in corporate boardrooms. They're advisors, professors, and such. So we structured a firm and our first fund to be a highly engaged process with our LPs. We intentionally designed it as a $10 million fund because under the revision of the Jobs Act, we could bring up to 249 limited partners into the fund, which means that we offer exposure and accessibility for first-time female accredited investors. So it's a little bit of a different, unique experience in that I think all of us, our alpha is what we bring strategically to our portfolio companies. It's our networks, it's our collective networks, it's our it's all those introductions and the things we do to advise our portfolio companies. And so I can give you an example. We haven't had any exits because we're only a year into the first fund and just about getting started with the second. So it's a little early, but I think this example kind of highlights what we're doing. We have, I guess it was our second investment in a company called Hitchworks. This was a founder. This is a founder here. We're US based, so a founder here in the United States. She was a chief human resource officer for a company called Here Technologies, and there she had built out this ability to connect using artificial intelligence to connect the most important projects within large organizations to skill sets, so that the most strategic projects at large organizations aren't always falling on the hands of the white male senior managing director, that work is more distributed more equally. And this became a huge and important effort, particularly at the time of the pandemic and creating more efficiencies and with these large corporations being able to access talent more effectively. So they play a huge role within DE&I initiatives. And I'm sure, Kelly and Rachel, as you find, as we do, with most female founders, while they may not be considered a traditional impact investment per se, these are women who are developing businesses and solutions that somehow have some positive impact to society or the environment. Obviously, from a governance perspective, they hire more diverse talent, they pay more equitably, they have advisors that are more diverse. So, and today is a great day, right? We had another public company, female founded, and we're going to start seeing more of that. So that's what's super exciting. So Kelly Stephen Weiss, who's the founder of Hitch, came to us through our network. We have affinity groups for marketing and CHRO and finance. And so when she came to us for an investment, we immediately placed her, or she chose actually out of our LP base, one of our LPs to be our board representative for her portfolio company. And this is a woman, Heather Jarahian, who has tons of experience in the marketing efforts, building small companies in the HR software space. And so she got so involved and engaged with this company. We built a SWAT team around Heather and Kelly as the CEO, with all of the things that Kelly might need to build the company: business introductions, access to executive hires, sort of, financial, being the sounding board for their financial projections and growth strategy. So our SWAT team would get together on a regular basis. Heather got so involved, she actually stepped into the business and is now president and chief operating officer of the business. So that's an example, I think, of a huge success in terms of bringing a network to bear for an early stage company and helping that company propel towards success. Since we've made our investment, other investors have stepped in. We've made those introductions to other investors. We've introduced them to a number of new business opportunities as well.
That's great. That's such a fantastic, just the network example I love from you at How Women Invest, to your LPs taking board positions, to becoming operators at the company. I think you can see sort of all of those, true network effects that happen when you bring all of that together. Now I know from our, our initial conversation a week or two ago, we're all passionate about, continuing to get more female funders around the table, either as LPs, GPs, et cetera. My hope is that there are some people on this call and listening that would be interested in investing or becoming an emerging manager. And so would love to hear, maybe first of all, if there were some initial challenges that you encountered when you started to invest or start a fund, or if there's some key lessons or advice that you would have for people looking to go down that path. Rachel, why don't we start with you?
Yeah, well, I will say that I am most definitely an emerging manager, so I'm happy to share advice, but I'm pretty early in the journey myself. And, I think that if you look at the statistics, the number of women investors is tiny. And so there are, absolute biases that you will overcome. There are absolute challenges. I think that, a lot of it for me has been around, defining the point of differentiation, defining, what makes Red Bike special, what makes our deal flow interesting, what makes our opportunities exciting. And so the one piece of advice, number one, I think that you have to do a good amount of soul searching and preparing yourself personally. I think, a lot of people enjoy supporting other women or might think, oh, angel investing is a lot of fun, but running a fund is a whole other level, both from, it's a hard job, it's a full-time job, right? So I think, at least for me, it's my job. It's what I do every day. I talk to founders every day. I pitch to LPs every day. So I think that, sort of defining what is your objective. Are you looking for a generational fund? Are you in this for the long term? Or are you just sort of like, somebody defined it as a VC vacation, which I thought was kind of a cool term. So, I think that's sort of my first advice, is to sort of think through what you want to do, what fits with your objectives, with the life, with financially. I think there are a lot of commitments. And it's, while there is a huge upside opportunity, you're not going to make money fast, right? And so I think that those realizations are really, really important. I think also thinking through, just as with a startup, and, when I started my company Scentbird, and we were 4 co-founders, and I was very thoughtful about, who was in the team and what were their superpowers and how it was complementary. I think the same thing applies when building a fund is, are you going to be a solo GP? Will you have co-GPs? What skill sets do they bring? Investors will have a lot of questions about, how do you work together? Because frankly, it's a 10-year commitment. It's a very long commitment. And so investors really care that, whoever is in the fund, they're going to work well together. They're complementary. They make decisions. So that would be my number 3. My number 2 advice would be around team. And, number 3 is just, go out there. I think we should encourage more women to be investors. We should encourage more women to, I think that the point is, even with a fund like mine, that it does not specifically say, okay, we only invest in women or we only invest in minorities. 75% of the companies that I've funded have minority or women. Why? Because my networks are much more diverse. Just like the white dudes and, the white dudes in hoodies from Stanford know a lot of white dudes in hoodies from Stanford. I know a lot of diverse, fantastic founders. I know a lot of people in New York. I know a lot of people through my Y Combinator network, but it just brings that diversity. So I'm hoping that we see more and more diverse women entering the investing world. So.
That's great. That's great advice. Erica, what advice do you have or learnings from starting out?
So totally agree with and can experience those same challenges with how women invest. I think the difference being that with the nonprofit, we definitely want to expand the ecosystem. This is one beautiful aspect or characteristic as I started getting more and more engaged in venture. If you come from a financial services background, everyone's very close to the chest with information. It's very non-transparent industry sector for the most part. Venture is a little bit different. Venture is all about the network, right? And so there is a lot more collaboration and sharing of deal flow and networking. It is a network game. But we definitely want to see more women being the decision makers. The metric is something like 11% of the decision makers in venture capital are female partners. And it's even smaller once you get to private equity. So we want to make sure that there are female decision makers all along that capital raising continuum, and that's part of our vision. With How Women with How Women Lead, we have an angel investing class. So we're bringing these very powerful, accomplished women who have now come into the power of their wealth and knowledge and experience, give them a safe room, if you will, to learn about what it means to be an angel investor, and some getting to understand the jargon, the terms, the key things that you look for when you're making an investment. So we just did a poll of our Fund 1. We have 211 LPs in Fund 1. And I think over 30% of those female investors have gone on to invest directly in other companies or with other funds. So it's that engaging experience that is broadening or expanding that ecosystem. And we're all about expanding the ecosystem versus competing within it. So for instance, last week we had Get On Board Week with How Women Lead. We had I led a panel discussion for what it means to be a startup company director. Well, we highlighted other gender lensed VCs. So I was moderating a panel like this, Kelly, like you are today. And we make it a systematic effort to be connecting with other VCs. We're part of an organization, and I'm sad she's not here, is Kate Broddick. She's the CEO of Women 2.0. And it's an organization, it's a nonprofit organization, it's a network of all female VCs all around the globe. And there's opportunities for us to collaborate, to share, well, what are best practices? Or one of my challenges is, well, where do I find an affordable fund administrator for 211 LPs? Who could I go to for legal counsel? What are the best practices when you're forming documents? So it's awesome to have a network of other women and the Slack channel where you can just quickly ask these kinds of questions, as well as the NVCA, National Venture Capital Association. We're members of that, and they have a venture forward group. So I would say, there's a number of organizations out there that are here to support emerging managers. But for sure, it's going to require a systematic change of how investors look at emerging managers, particularly for venture exposure. These are 10-year funds. We don't have track records, performance track records like you see in other asset classes. All I can demonstrate is my ability to properly allocate the capital and invest in these portfolio companies, finding good companies, supporting them, demonstrating that these are companies that can go from a seed stage, Series A stage to Series B and beyond, right? Until that exit occurs. So really, our track record is about deploying capital effectively and efficiently without wasting the entrepreneur's time. We're very sensitive. So we've, as a former investment banker, we have very disciplined processes around due diligence. We're trying to right size that experience for our entrepreneurs. And then to Rachel's point, it's about people. So I have a phenomenal, I'm a co-managing partner in the GP with my partner, Julie Castro-Abrams, who's the CEO of the nonprofit organization. We're very complementary in our skill sets. She has a completely different and unique network than my own. She has a very different ability to read people and products and services. And then we also built a limited partner advisory council that we meet on a regular basis. We have removed group group bias from our decision-making process in terms of recommendations of when we move forward with an investment opportunity. But these are experienced portfolio managers in private equity, in venture capital, and we have that ability to work with them as being aligned as investors in our fund.
That's really phenomenal. Thank you for sharing all of that. And there's a couple of things both of you said that sort of had my wheels turning again, kind of along these lines as people potentially, think about raising capital or going down that path. I mean, I think you both talked about how LPs really dig into the team and also your own team dynamics and how it's a marriage and sometimes outlasts some other marriages. But the other thing that comes to mind is you're raising capital, and Erica, you alluded to this as well as, of course, it's an investment vehicle. There's a lot of emphasis for emerging managers on track record. And I think even from my own experience, there's a lot of interest and support in emerging managers. There's also a lot of emphasis on track record. So it's, that can be sort of chicken and egg for emerging managers of like, I'm trying to get started and really establish a strong track record, and I need a strong track record to get started. So would love to hear from both of you. How do you think about track record, and how have you represented your track record to potential LPs? And again, you've both alluded to this. When it's an early stage fund, even when you're raising fund 2 or 3, you may not have an exit yet.
Yeah, I mean, absolutely. As you well said, particularly if you're investing in seed or even pre-seed, most of your exits will take 5-7 years to happen, right? And in a way, it's sort of self-selecting. The ones that last longer, in a way, are the ones that grew bigger and are closer to an IPO. So that tends to be a better thing. So, we've done a lot of benchmarking, a lot of conversations with other emerging managers. I think, the way I personally present our track record is, we have 18 angel investments that we did prior to launching Red Bike Capital. And the way I present it is I articulate, look, number one, it shows our access to deal flow. Number two, it shows our thought process. How did we think about this? How did we analyze the opportunity? What is it? And number three, there are some nice wins. So for example, out of the 18 investments, 7 of them are 3x or more. And we also talk a lot about, signaling co-investors. So for example, one of the companies that we invested in, it's called Queenly. We invested prior to them graduated from Y Combinator. I'm very connected to Y Combinator. And then Andreessen Horowitz invested. And so that's a very nice signal to talk about. But it's hard, right? So it's a lot of, understanding the signals, understanding the sort of key points that LPs care about. And I will say different LPs care more or less about the gender lens or the diversity lens. Some just care about performance. They just want to see the numbers. And so for us, it's very important, in the end, this is a financial endeavor. And the way I think about it is the best way I can drive impact is by, investing in the best companies, giving diverse founders a fair shake, but most of all, making my LPs a lot of money so they can go on and make the world a better place. So that's really how I think about it.
Yeah, I agree. I think the only thing I would add is sort of the risk management component to it. We're a US-based fund, but we care about diversity. We look at diversity in a number of different ways. It's industry sector, it's stage, for fund 1, it's the stage of round, right? So we have a couple of seed investment stage companies, Series B. So that's a risk reward sort of trade-off. It's industry sector, it's women of color. It's our due diligence process where we won't invest in a company unless we have an LP that can act as a subject matter expert. to help us evaluate and then prospectively support that portfolio company. Again, I go back to that alpha as far as what we do as a network to support these portfolio companies to their success. And we have a disciplined way of evaluating these companies and testing these founders for that 10 times return objective, and we probability weight that opportunity. So we really do test the portfolio company on their financial projections and their models, and how often they really use it as a dashboard and as a tool that they live by, and that we collaborate and discuss on a quarterly basis.
That's great. Again, there's a couple of things that you said that I'd love to drill into. And, I think, again, Erica, you shared a little bit about some things that you feel like are working really well with diverse managers in the ecosystem, and how you're seeing collaboration, you're seeing support, and just overall, it feels like a net positive for the ecosystem. Could you expand on that a little bit more and share a little bit more about what you're seeing?
Particularly as a gender lens fund, where we're focused purely on female founded companies, we think it's super important to make sure that there are other women sitting on that cap table. We can't be the only check for a micro fund, so we're not going to be the largest check, right? So for us, it's really about ensuring that there are other gender lens funds or strategically aligned investors on the cap table, because ultimately they'll have that female founders' interests. They'll hold them up front and high, those interests. Some of the businesses that we look at, they may be, so we invested in a company called Hello Alice. They're going through, and it's a Latina founder, we're really, co-founder, we're really very excited about what they do. They're impactful in the fact that they're a fintech company that brings working capital, access to SBA grants and loans, mentorship tools for 500,000 plus small business entrepreneurs, particularly in underserved communities. So they're impactful. They're delivering a really important service, but they're also going through the Women Business Enterprise certification process, and so they have to be able to demonstrate that they have women on the cap table, that women are the largest donor in the business, that they are led by women, and then that certification process allows them access to contracts and invest in client opportunities that they can take advantage of because they have women on the cap table. So and for us, the ecosystem is not just about partnering with other gender lensed funds. We actually followed QED Partners, which is a fintech focused investment venture fund. This is a fund formed by the founders of Capital One Bank. They led on that investment round, and we followed, and they were excited to have us on the cap table because of our network. So we spend a lot of time talking to other VCs and private equity, because prospectively, that's where our portfolio companies seek capital in the future. Whether they're male or female, it's really more about whether they're strategically aligned with that portfolio company's vision.
That's super helpful. Thank you, Erica. Kind of along these lines, Rachel, a question for you. As we think about new diverse managers in the ecosystem, when we've chatted previously, you shared that Latinx is the largest minority by far, with 62 million people. However, you also shared that there are approximately 10 well-known Latinx investors, and I know you are passionate about changing these numbers. Can you share a little bit more about why that's so important and what more we need to do to accelerate change?
Well, I think that, I think what's really interesting is that the Latinx community is sort of the sleeping giant of the US economy. So we are 63 million people, 18% of the population, 21% of the workforce. But I think the part that's most interesting and exciting, it's almost 30% of Gen Z. And so what you're seeing is this demographic shift is going to continue significantly. And you're seeing their spending power is getting a lot bigger. So I think that as a population, the GDP of the Latinx community, I think it's larger than Mexico, Australia, Spain. I mean, this is a very large demographic. And I think that for a long time, for a lot of reasons, I think it's a community that, probably hasn't amalgamated the way the African-American community has, for a variety of reasons. But I do think that there's a huge opportunity moving forward. And, to the point of, I think that there's sort of like, it's right to give people the chance to pitch to people who look like them and have their experience on the other side of the table. But it's also that we know that when you put more women invest in more women. 2 times, I think a Harvard study was like, if you put women, right? And I think the same is going to happen if you put more Latinos. And so if you think about where this country is going and where the opportunities are, it just makes a lot of sense. So it's something that I feel very passionate about. And I think that the numbers are there. It's really what it's about.
Absolutely. That really resonates, and we have so much to do and so much further to go. Erica, you said something earlier that again really resonated, and I'll ask this question and then we can flip it over and open it up for the audience. But you made this comment about the need for female decision makers all along the investment continuum, and that really resonates. And for me, I think a lot about, and maybe it's because I also spend my time in early stage, pre-seed and seed, and look around and see other phenomenal managers in pre-seed and seed, and probably the thing that keeps me up at night is, do we also have more diversification from the seed to growth, and private equity and beyond? But as we think about that, I'd be curious to hear from both of you, what else do you think needs to happen to accelerate overall diversification of the ecosystem?
Yeah, I get asked this question often, and we think about it, and with How Women Lead, we do a lot of brainstorming around this. I think in terms of asset classes, venture is a prime opportunity for fund of funds. The fund of fund model hasn't always been successful. We know its history in the hedge fund model. There are private equity fund of funds, but in order to bring more decision makers and to really raise the opportunity for emerging managers like ourselves, the fund of fund model needs to be thought about a little bit differently. There's huge institutional allocation potential to us as gender lens funds. They just can't put that kind of capital to work directly with emerging managers. It has to really go through a fund of fund or some sort of emerging manager platform that makes financial, strategic, economic sense for everyone, and doesn't mitigate the return and opportunity, nor creates concentration issues for us as money management platforms. With How Women Lead, again, for us, it's about the movement building and the awareness and bringing more women, putting them on the stage and spotlighting private equity managers that are women, making sure that they are actively visible, that female entrepreneurs know that does continue. And I think a lot of it obviously has to start with our universities and these private equity firms that are now starting DE&I initiatives and creating, having that dialogue with the major with the Andreessens and the Sequoias and the Tigers of the world that are just putting out so much capital, but really ensuring that they have the discussion going on internally about their own DE&I initiatives and putting their own women up there in terms of decision-making roles, so that our female founders can have another Rent the Runway experience.
Yeah.
And I would add to what Erica's saying. I think her point about fund of funds is well taken. I think there's sort of a chicken and the egg, and there's like, I to quote Elvis Presley's, a little less talk, a little more action.
Yeah.
I think right now we're at this point where everybody's talking, everybody's trying to figure it out, but there is sort of this, there's a very well-known bank that said, we support emerging fund managers, but they only support funds that are over 100 million. There are not a lot of women-led $100 million emerging fund managers, right? Because that's a very high bar to reach. And so how do you facilitate if you look at the statistics of the number of women starting funds, they're starting smaller funds, they're starting seed and early stage funds because, we don't have that access to fundraise these billion-dollar funds. And so how those institutions sort of gnaw at this problem of, over allocation of, how do you manage the due diligence of an emerging fund managers? How do you look at track record? I think that, I think there's a lot of good intentions, but it hasn't been figured out yet.
Yeah.
And it probably requires more discussion with the gatekeepers, right? The institutional consultants and their framework for evaluating emerging managers.
Absolutely. And I want to switch. I know I could keep asking you questions, but I'm going to switch. There are a few questions from attendees, and you've hit on a couple of them in the last 30 seconds. So it's a good segue. But one question came through to the point made on track record. What has worked in bringing LPs over that hurdle? Do you only seek capital from certain LPs?
Certainly our LPs ask about performance, and really for us, it's about educating many first-time investors to venture, because we are able to offer a much lower minimum than your traditional venture fund. Ours is a $25,000 minimum versus the traditional $250,000 minimum. We make it accessible and are able to provide exposure. So for us, it's about engaging the LP in the experience and educating them on what it means to be a long-term investor in private companies, and then it's not going to be the largest chunk of their portfolio allocation, right? This is a small percentage of their portfolio allocation. So again, I think, in terms of track record, yes, we have a fund administrator that tracks when we invested, what the valuation was when we invested the capital, and then tracking that for valuation exercises that continue through that portfolio company's growth story. And a lot of it, frankly, is storytelling, just like selling, just like positioning your own business, positioning your, whatever you do in life, there is storytelling involved. And for us, it's about the kinds of companies that we're investing in and all the phenomenal things that our portfolio companies are doing that are making a positive impact to the environment, to society and such.
Yeah, I mean, I think a lot of what Erica is saying makes sense. I mean, I think that as a first-time fund manager and somebody that's not sort of rolling off from Sequoia, I think that, there's different situations. You do hear of people raising very large funds from institutionals in Fund 1, but it's usually people who are already been in the ecosystem for many years. I think that the conversations need to be had. The relationship building is important. But realistically for Fund 1, it is family offices, high net worth individuals. For us, it's a lot of founders, a lot of operators and executives. Those are the people that are early believers. And, frankly, I hope to make them a lot of money and reward them with, a lot of, excellent results and future allocation. So, I think that one of the things that somebody advised me early on when we were starting the fund is, you can spend a lot of time talking to these institutions and they're all very nice, right? Like that's what they do for a living is talk to funds, but they're very unlikely to invest in first-time fund managers. And so how you manage your time, how you get to, have money to allocate and prove out yourself, you have to be very strategic about.
Absolutely. Another question from the group, how or why have emerging manager and or gender-focused investment programs failed historically? How are you approaching this space differently, other than being female allocators?
it's a case study all in and of itself. So public pension funds like CalPERS, they have an emerging manager program. There are consultants like Bivium that focus on emerging managers. It's a dialogue and not bending in terms of fee structure for your own, because as a microfund, we only get a tiny percentage as a management fee. For a microfund, that affords me one dedicated analyst on my team. The rest of us are just strategically aligned with the performance and the outcome of the fund. So basically, I'm a volunteer for my own investment fund, right? That may not be the case with after Fund 2 and definitely Fund 3. With each fund vintage, I think it's really important to be able to demonstrate that it's about your deal flow opportunity and how you're allocating capital. So fee structure, I think, has been a failure in some of these programs where the negotiated fee is so tiny, as well as education around try not to have such a concentrated client base, right? So you have this anchor investment through a large emerging manager platform. Well, maximize that, leverage that opportunity, build out a diverse client base. And then, I think at that point, you're just really building an asset management firm that has all the key qualitative drivers of value. It's ensuring that you have great client service, which for us as a venture fund means that we not only deliver quarterly reports, but we have quarterly events, we have individual conversations, we have a lot of communication flow with our investors. So that there are no surprises, because inevitably, especially when you're dealing with early stage investing, you're going to have failures in there. So the closer you are to your LPs and maintaining that dialogue, I think goes a long way.
Yeah. I mean, I think that I don't know if I have much to add. I think what Erica said is pretty spot on.
Yeah, I was going to add just, we think a lot about this, and just some comments you made earlier. I see that the diversity piece is really important as it relates to access and differentiated deal flow. And so similarly for us, we see 80% of our deal flow includes a diverse founding team. And again, that's really meaningful in terms of differentiation in the ecosystem, but at the same time, I think really focused on the other couple legs of the stool. And again, one of those being, and I think you share a lot of this as well, being that operational focus and help. And I think one of the things we offer as an early stage fund, and it may be different, particularly than some of the extremely large funds, is our ability to roll up our sleeves, dig in, build a deep trusted relationship, be highly accessible, and hopefully be that partner that founders call when it feels like things are going south. And we want to be the one they call. They're like, I'm afraid to call someone. We're like, call us and like, let us dig in and help troubleshoot and figure it out. Like, the founder journey is very up and down. And so, I think we think a lot about those components to help founders be wildly successful, and then hopefully in turn help us be wildly successful. And ultimately, as we talk about diversity, I think performance will be the number one thing all of us can do to continue to accelerate diversity in the ecosystem. And so I know, just speaking of like, we think a lot about that as well. I know we've got a minute or two left before I hand it over to Alyssa. If for fun, maybe we can do a little bit of a lightning round. I'm going to give you, I'll just assign out a couple words. I'll give you a word and you can give me one word back. Erica, we'll start with you. The future of venture capital.
Women.
Love it. Rachel, diversity.
Proof points.
Erica, impact.
Environment.
Rachel, performance.
Takes time.
2 words. I'm just kidding. Erica, Miami.
Innovation.
And Rachel, last one, LP.
trust.
Love it. Thank you both so much. I am going to hand it back over to Alyssa, who I think might have some closing words for us, but really enjoyed the conversation. Thrilled to have both of you as emerging managers as well, and can't wait to do more together and move the ecosystem forward faster.
Thank you so much, Kelly. You did a great job. Thank you.
This was amazing. Thank you.
And Rachel, so nice to be connected as well. Oh.
Thank you, Kelly, Rachel, and Erica. A great session. Thank you to all of you who came to join us live today, and thank you to everyone who's catching this on the replay. Happy to share that part of our work has been underwritten by, supported in part by the MacArthur Foundation, and of course by the contributions of members and people, individuals and corporations who support our work. So wouldn't be possible without you. If you're interested in keeping in touch with us, become a member. The link is on the screen. It was also posted in the chat. Please consider making a donation to support our work. And that is all we have for today. I want to thank you again to our speakers and to our audience for coming. We'll be sending out the video as soon as it's available, as well as a synopsis, which will have captured all of the links shared today. So please don't hesitate to be in touch with us if you want additional information or connections to High Water Women or any of our speakers today. So once again, Erica, Kelly, Rachel, thank you so much. Thank you, Valerie, to our Young Women's Council, and Shannon, and people helping behind the scenes, Caroline Lovelace, and our board chair, Anna Snyder, who's also in the audience today. So thank you, everyone. Have a great night.
Thank you, Alyssa.
Thank you.
Take care. Bye-bye.
Bye.